been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Bupp has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Bupp.
Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. Now, our guest for this week's show is CEO and co-founder of LandGate.com, Yoann Hispa. Now, LandGate is an open property rights marketplace that provides free listings of mineral assets, wind, water, solar, timber, cell tower rights, and more. Now, prior to founding LandGate, Yoann was president of Optimix Energy Corp, where he worked as COO for private investors, private equities, and small E&P companies in their oil and gas evaluations, acquisitions, divestitures, and drilling operations. Yoann has 15 years of experience in the oil and gas industry, mainly with operators in various technical roles from Geoscientist to Reservoir Engineer. So guys, I'm excited to introduce Yoann to the show. But before we do, I just have a few quick housekeeping items to run through. First and foremost, you've probably been hearing me talk about this the last couple of episodes, but if this is the first time you're listening, maybe not then. We've just launched our latest mobile home park investment fund. This would be our third mobile home park investment fund. Just went live a few weeks ago, and we've had a great amount of interest. In fact, it's been a lot of pent-up demand. Last offering we shut down about a year and a half ago, and so we have not taken any investor capital in over the last year and a half to put into the manufactured housing space. And this offering is a Reg D 506C, and it's open to all accredited investors. Now, for those that don't know me, again, maybe this is the first time you're listening to the show. I've personally specialized in mobile home parks for nearly a decade, way back before most investors thought that this was a great asset class. Now the secret's out, and all the big groups such as Blackstone, Carlyle, Apollo Group, what have you, have jumped into the space, just and a litany of others as well. So just lots of capital pouring into this space. So if you want to learn about partnering with my team and I, you can head over to our website, sunrisecapitalinvestors.com. Simply click on the Invest with Sunrise button, and you'll get access to our PPM and offering docs. And just to let you know, we've got a number of exciting off-market opportunities that we have in the pipeline. And that's what we really do best. That's our specialty. We've built a proprietary database over the last 6 or 7 years, basically databasing every mobile home park located throughout the U.S., but not just the mobile home park itself, but personal contact info for the owners, where they live, their cell phone numbers, what have you. And so we've spent years and years developing relationships with many mobile home park operators across the country. And a lot of times we get the first look when they put their property up for sale. And so a lot of times we don't have a lot of competition, which allows us to get better deals. So with that, guys, again, if you have an interest in investing, sunrisecapitalinvestors.com to learn more. Moving on here, if you love what we're doing at the Real Estate Investing for Cash Flow podcast, please subscribe to the show. That way you get notified of when a new episode comes out. But even more importantly than subscribing, the rating and review. If you haven't done so already, and again, if you feel this show adds value to you and your business, please leave a 5-star rating and review. It's really how we attract awesome guests such as Yoann to the show. So please take a moment to do that. And then lastly here, guys, I want to remind you of the free 30-minute phone call that I offer each and every Friday afternoon. I've been doing this for now 6 years. I've talked to hundreds of you over that period of time. And this is where I set aside 30-minute time slots on Friday to chat with you, to connect with you via phone. And this is just a way for me to connect with others that share the same passion for real estate investing that I do. And it doesn't matter if you're brand new to the business or you're a seasoned pro. I love connecting with all likes. And again, I get just as much out of these phone calls that you do. And so if you want to schedule that call with me, go to my website, kevinbupp.com, and I'll look forward to meeting you. And so now, guys, without further ado, I'd like to introduce my guest for today's show, Yoann Hispa. So Yoann, how you doing today, my friend?
I'm great. Thanks for having me, Kevin.
Yeah, thanks for joining us here. Very excited to have you here. And, Yoann and I are going to talk about a topic. I'm just going to be forthcoming here with everyone that's listening. This is something that I am very much a neophyte at. I don't have a lot of experience. In fact, I have little to no experience whatsoever in mineral rights investing. And so I'm excited to have you on here today because he's an expert in that space, and he's going to tell us all the good, the bad, the ugly about mineral rights investments. And so with that, Yoann, what I'd like to do before we dive into the meat and potatoes of the show, take a few moments and tell us a little bit more about yourself, your background, how you got into this space, and then, also a little bit about LandGate and exactly what LandGate.com is.
Yeah, thank you. So I think you can hear from my accent that I'm French, and I'm also by origin I'm Spanish, and I've been in the US since 2002 when I went to UT Austin, and then went back to Europe to work. I have a bachelor in math and MSc in civil engineering from Paris in France. Then I have a master in geomechanics from the University of Birmingham in the UK, masters in petroleum engineering from UT Austin, and then I have an executive MBA from the University of Colorado. I've worked for 20 years in the oil and gas industry and other land resources industry. I've worked a lot with operators doing evaluations and of mineral and oil and gas assets. So that's what I've done a lot for the past 20 years. I've worked with a large operator called Anadarko, bought by Occidental Petroleum. And after that, I started working with private equity and private investors. And I was supervising their investments and evaluations of assets in the mineral space. So I was doing a lot of valuations, trying to understand what they were worth and how much money we could make with the private equity and those private investors. That was a lot of fun. What I've noticed is when companies buy from landowners their mineral rights, then typically the landowner gets about a fifth of the value, because that's they don't know how much those properties are worth. And obviously for private equity or an energy company, it makes things very it makes your benefits very large when you do that. But you also have acquisition costs there. And that gave me the idea with a colleague, Craig Kaiser, and also Dan McHugh, who co-founded LandGate Corporation. It gave us the idea to create a marketplace, create the Zillow for the land resources that we see has been lacking. So bringing more information to the landowners will help them understand how much their mineral, solar rights, wind rights are worth. And it's going to actually accelerate the capital flow, because it makes them feel more comfortable to sell or lease once they have confidence in the value of their property. So it makes the capital flow go faster to have created a marketplace. So what LandGate does, in a nutshell, we're a Zillow for land resources. We provide, just like Zillow, we provide free data intelligence. That's our marketing tool for buyers and sellers. You go on a website, you can see millions of dollars of data for free. All the producing wells in the US, you can see all the well data, the production, the operators, you can search for that, and that's all free. For solar, you can see solar irradiance, substations, transmission lines, solar farms. You can see on the wind side, the wind farms and wind speeds, water wells. We have millions of water wells in the US. All that data is free. We attract people. Same thing as Zillow, right? There is a platform with free data. Then we have the marketplace. We have listings because sellers come and they trust the values they're seeing. We started publishing also on the website what we call land estimates, which show the value of each parcel in the US for the mineral rights, solar rights, wind rights. So the same as the Zestimate, right? Except that we have a bunch of Zestimates to calculate, right, for each land resource that the parcel has. And we also offer appraisals.
So is it public information? All the, let's just talk about maybe water or oil, rights on a particular property. I mean, is that public information where every piece of land in the entire United States, it's already documented where those water wells are, where the oil is, or no? Is that not the case?
Some of it is public, And a lot of it needs a lot of interpretation and analysis to understand. So if the best comparison is the mineral, solar, wind, all this space, it's like real estate 2 centuries ago. Like you don't have access to much data unless you're a large company and you're investing millions of dollars a year to obtain that data and analyze it. And that's what we're doing for everyone for free. We're doing this analysis. So we're taking the public data from the states, governments, federal and other institutions. We are analyzing it. We have digitized the valuation process and automated 99% of all that work to provide to buyers and sellers a boiled down value and understanding of all those land resources.
Okay. So if I had a piece of land out in Colorado, a swath of land, whatever the size might be, I could type that address into your website and determine whether or not there's any opportunity there. I mean, I might not know. I have no idea. I inherited this piece of property. I don't know if there's any mineral or water rights. If I type that address in, would you guys be able to determine that? Would your website be able to determine if there's any minerals under the ground or any water under the ground that might have a higher value than the land just itself?
Yes, we'll tell you the nearby activity in terms of oil and gas operations. We'll tell you the value of those minerals and the solar rights and the wind rights. We'll tell you if you have like transmission lines near you, solar farms, wind farms. So we'll give you all that valuation. Now, I need to just say one thing. You cannot type in your address. We were enabling that in the past. You can type in your zip code, your city, and then click on your parcel. The only reason we disabled the address search is because we work with a lot of rural parcels and they don't really have
an address.
They don't have an address. So people were getting confused with that. So we turn it off and we just say, just look up your zip, look up your city, look up your county. You'll find your parcel. And if you have any question, we can help you locate it.
Got it. So I'm going to back up a little bit. Just again, for those that are listening, that might be as much of a neophyte as I am when it comes to this topic, explain to us what does it mean to actually, sell the rights of a property versus selling the physical property in and of itself?
So when you're on your land or your surface, normally I would say, or your minerals come with the surface. Right. And if they were attached to the surface, if they hadn't been severed in the past. So let's assume all of that, you have all your property rights. You haven't severed any of them. Your rights to use that parcel, whether we're talking about the surface, putting your dwelling, right? Or exploiting your minerals for oil and gas, exploiting your minerals for mining, coal, any other mining activity, or exploiting your surface to put solar panels, put a wind farm, have some easements. These are all property rights, and you can separate them from the ownership, the same way as you create conservation easements, right? You can create those and they become separate. So on the mineral side, it's been very common until now. Like minerals are severed from the surface rights. So a lot of the landowners still own the minerals and they are still linked to the surface, but you do have mineral ownership that can be separate. And you can lease your mineral rights, which is one thing, and you can sell them. So if you lease your mineral rights, it's like you authorize an operator, an energy company, to come exploit your mineral rights and extract oil and gas for a certain term in your lease. Same thing with a lease option for solar rights and wind rights, but you can also sell them.
Got it. What percentage of landowners, this is going to be a tough question. I don't know if there's really an answer to it, but what percentage of landowners that actually have some type of mineral, water, or any other type of rights that could be of value, don't even realize that they actually have an underlying value other than the physical property itself?
Sorry, can you repeat the question?
Yeah. So what percentage of landowner, we're talking, I think before we started recording, I was kind of asking, are there a lot of landowners out there that don't even realize that they actually have some type of valuable mineral or other use of that property? They're not aware of it, right? Is that the majority or is that the minority of landowners that just aren't aware that they even have some type of valuable mineral under the ground that could be exploited and bring a substantial value to that property?
I think 99.9% of them mineral owners out there don't know the value of their property. That's for sure. They don't know like how much it's worth. Some of them know that they have valuable minerals, but they don't know how much it's worth.
Got it.
And a lot of them don't even know they own minerals. Mm-hmm. Because they inherited and it got passed on and it got lost.
What does the valuation method look like? If you could, from a 10,000 foot view, how do you guys determine what the underlying value of those rights are on any one given property? I know that's probably an incredibly complex answer, but if you could dumb it down to layman's terms and keep it high level, and because again, the folks that are listening to the show, either it's going to be an income based, from real estate perspective, it's going to be a comparative sales analysis, or from an income perspective, it's going to be one of those two for the most part.
Right.
What is the general evaluation method for mineral rights or what have you?
So for mineral rights, same thing for solar rights and wind rights and water rights, it's an income-based approach. That's how you value assets, or the same way as you value companies.
Okay.
You value the cash flows and you risk them. And that's your best way to value those properties, because they are so distinct from one another. There is no one ownership and one mineral rights that would look the same. Mm-hmm. So it makes a comparison approach very, very difficult. The second reason why a comparison approach is difficult is because landowners don't know how much it's worth. So typically, and I was on the mineral buying business in the past. My colleagues were in the solar rights leasing business too, with energy companies. And typically, you use the fact, as a buyer, you use the fact that landowners don't really know how much it's worth. Now, you do have a lot of acquisition costs to get to that point, but you use the fact that they don't know. So what that means is a transaction between a buyer and another buyer, so between energy companies, that transaction is going to give you a real comparison approach, like a real value of these land resources. But all the transactions with landowners, they're all over the place because the landowners don't know how much they are worth. So some values are like close to the market value, but a lot of them are much lower. So the comparison approach doesn't really apply. Does that make sense?
Yeah, no, absolutely.
So that's the big picture. Then I can tell you what goes in it if you want.
Yeah, please do.
So, minerals, solar, wind, they are different. So I'll try maybe to start with the mineral side, and then we can talk about the solar briefly if you want. What goes in it in minerals is you may have oil and gas producing wells on your property. And if you do, then you need to forecast the production of those wells to understand the future production and associate that production to the future NYMEX commodity prices of the oil and the gas, right? So you put those future prices and you associate them to understand the cash flows in the future of the producing well. You do the same if you have drilled wells, you do the same to model future drilling locations. So hydrocarbons that should be exploited with other wells on your property. So we need to calculate how much resources there is in place and how much can be exploited, how many more wells can be drilled, and to exploit that resource. And when would those wells would likely be drilled based on recounts and activity from operators. Then based on SEC reserves nomenclature, we need to tie these future cash flows to a reserves category and risk them. That risking, then at the end, you just add up all those cash flows and and you end up with a market value based on the risking.
With how much accuracy can you determine, how much oil can be exploited from any, from a location that has not yet been drilled? I mean, are we talking 99% accuracy, 80%?
I think LandGate is very accurate with the current data that we have. Okay. What that means, the current data we have, is you keep finding more resources as we go. So, and as the technology increases, there are resources that you have today, and tomorrow you might double those resources by having better technology. So you have a resource in place that you can calculate, and then the reserves that you can exploit is dependent on the technology you have and the economics to exploit it, right? I'll give you an example on the solar side. It's very similar. Like, you have solar panels, they have let's say an efficiency of 22%, let's say today, or maybe, so you get so much solar irradiance on your per square meter on your parcel, but you can exploit only that many megawatts, right? But then maybe with different technology, improved efficiencies of the solar panels, then you can increase that and increase your reserves. So the bottom line is, like, we're very accurate knowing the current technology, but as the technology improves and we can exploit more, then we keep moving with that technology.
Understood. But with the current technology, again, let's just use oil as an example. At what accuracy can we determine how much oil is actually in the ground with today's technology? And not how much can we exploit, because I know that that technology will continue to improve, what have you. But today's technology of determining what's actually in the ground, how with how much accuracy can we come up with that or arrive at that number?
Well, I would say 80, 90%, knowing what is in the ground. Now, knowing that LandGate as a company, we're not in the exploration business. So if there are parts of the resource that have not been discovered yet, that's not, that would have little value to anyway at this point, because it's so much far. Everything that's exploration, it's the risking of those exploration prospects are so high that the value is quite low until the wells are and the resources are discovered. Does that make sense?
Yeah.
So we keep really track of the discoveries. So we right on the ball there to add the value when we know the value exists.
Gotcha. How does someone like myself gain a better understanding of these different, these various investment vehicles, in mineral, solar, wind? I know that cell phone tower is another thing. How does one that's maybe very comfortable with real estate, which is our listener base, how do they start gaining a better understanding, a more comforting level to where, they feel comfortable to make an investment in this space? I mean, it's a different world. I mean, the valuation method is very similar, but it's a very different world than that of a physical, building or, a physical structure, what have you.
Yeah, no, exactly. I think the fact that there is a marketplace out there to find deals and that we provide free data intelligence, I think that really helps the sellers, but also the buyers, to feel much more comfortable buying land resources, leasing them or selling them or buying them. And that's what's been missing in the space, right? And when I was saying land resources is like real estate 200 years ago, only a few companies spending millions of dollars a year can understand the value of those land resources. And that's what we're trying to change. And so for you, if you want to know what your parcel or what a parcel is worth, then you can go on a website, just look it up, find the value of the land resources for that parcel. And if you want to see maybe an opportunity of buying, let's say mineral rights, you can buy the actual resource itself. That's really what's good with that. You buy the resource itself. You don't buy stocks in a company that has a lot of volatility based on management team and other company type specifics. you buy land resources, and you can build your portfolio buying. I'm going to buy mineral rights in the Permian Basin. I'm going to buy solar rights on the East Coast and on the West Coast, and you can balance your portfolio as an investor. You don't have to pay those millions of dollars to get that data and additional large G&A costs to go acquire those land resources by, literally harassing landowners by telling them just and getting what 1% of them are going to sell or lease to you,
right?
And that's not really, that's a business model that I think is still exists, right? That's still what's going on, but I think that's what has changed in a residential real estate, and that's what has to change for land resources. It has to be more open to any type of investment to get the capital flow to move much faster.
Got it. Wouldn't it just be easier for someone like myself, instead of going to buy a parcel of land that has, oil, where I could, basically capitalize on those mineral rights? Wouldn't it just be easier for me to just go buy stock in Exxon or Shell or, one of the other publicly traded companies? Give me the comparative basis of why one versus the other.
Well, their stocks has been going down. That's one thing. And the resources value has been going up. Now, you always have a little bump on the road every time you have a recession there. But if you look at water rights, the water shares, just take Colorado, right? Like water shares in Colorado, they've increased by a fold, at least a fold, and one order of magnitudes, and over the past few years. So those resources, there is a pressure on the population in the US keeps increasing, and investing in the resources themselves in the United States, that's a really safe investment. That's what we feel. And you don't have to invest in stocks that are much more volatile.
Of the different types of land that you guys offer on LandGate, the different types of, the natural resources that one can invest in. Oil, gas, water, I see solar, cell tower, mining, wind, agriculture. What's hot? What is the hot space today that everyone's chasing after? And then I guess the second part of that question would be, what's it more of an up and coming space that the folks should be aware of that might not be as hot as that number one today?
So I'll start with what was hot in the past. Minerals were really hot, until late last year when the commodity prices started falling. Mm-hmm. Is it going to come back up? Yes, it has always come back up, and people are still driving their trucks, and they'll still need oil and gas to power their homes and the economy. But what's really hot?
Well, not to interrupt you, but is now the time? Then is there opportunity, given that oil prices are down? It's a little bit of a depressed state. Is there an opportunity to buy at a good value at this point in time, or no?
Well, right now it's the best time. What we've been finding is that a lot of them. The problem in the oil and gas space, on the mineral space, is a lot of the buyers, those institutional buyers who've been buying for a long time, let's say private equity buying, they have these they have these portfolio companies that they create as a vehicle to buy those assets, and then they have a life cycle of about 3-4 years, and then they need to sell those companies. If they haven't sold them after 3-4 years and they miss the cycle, they just run out of juice and they go bankrupt. So that's what you've been seeing on the mineral space. So what that means is the traditional buyers are gone. They don't have enough cash right now. Mm-hmm. So it leaves a lot of opportunities for the non-traditional buyers who can come in and place their investments in mineral rights, and that right now they are at a very good value now for an investor.
Mm-hmm. Got it.
I need to talk on the.
Yeah, and I interrupted you, so please go ahead.
No, that's great. It's great. What's hot right now is renewables, right? We're seeing it, what the difference is between mineral rights and renewables is all the incentives. So you have a lot of tax credits Minerals have tax credits. You have ITCs for the minerals. But what the renewables have in many states, they have energy credits and other sort of credits that basically increase the commodity price, how much the electricity is bought per megawatt hour. I'll give you some values, for example. Right now, what we call a local marginal price for electricity is, let's say like $35 per megawatt hour. So that's what's trading in different hubs, hub points across the US. And those credits can go up to, in certain states, they can go up to $400 additional per megawatt hour. So you have a commodity price of $32 per megawatt hour, but the state is adding $400 on top of that. You see what I mean? So that makes the economics so juicy for energy companies. The really interesting thing that we're seeing is, you would think that, I mean, there's all the buzz about renewables and people, in the name of saving the planet, energy companies basically make landowners take any deals right now. And private investors don't really have access to leasing solar rights or getting royalties in solar rights or buying the solar rights. They don't have access to that yet. And that's what we're trying to change at this point too. Mm-hmm. But so the energy companies, they just the same as they were doing for mineral rights, they basically give very, very low values to landowners. And in return, they make the profits are huge. When you see all those credits, the profits are huge. They are huge. Yeah.
So I'm on your website right now, and I'm trying to use the search to see if there's any, solar or, wind investment opportunities available. It doesn't seem like there, as you had mentioned, there's not that many that are really ultimately available to maybe smaller investors, non-institutional type investors.
Well, you do have, I think we have about, let me look them up. So if you go on the top left and you change oil and gas to solar, then you can see we have 36 listings of solar rights there from different sizes. And we're about to list some very, very large assets on the solar rights. We're about a couple of weeks behind in pushing those listings on the website. And you can see some on the East Coast, on the West Coast, New Mexico, Texas, in terms of incentives and credits. The East Coast is really good, right? These are really good listings if you want to make for an investor.
But are these the ones that are listed here right now, like the wind, any of the wind investments that are for sale, are they actually cash flowing? I know a lot of them are just, or are they at a point in state to where, they're actively out for bid for an operator to come in and put the windmills there.
So that's a really good question, Kevin, but I'll back up a little bit to answer it in two steps.
Okay.
And before I do that, I'll tell you that Dan McHugh, one of the co-founders, he's a professor at UT, adjunct professor who teaches land for minerals, land resources, solar. So he teaches the whole land and leasing and the rights for that. It's very complex. Mm-hmm. What you're thinking is mineral rights have been completely severed, right? So where energy companies lease them, but individuals can also sell those rights, and they come with royalties and cash flows. Mm-hmm. So you can, and you have a business of buying leases and buying those rights to get the royalties. So you don't have to pay for wells to be drilled. You just get the royalties. Yeah. For the solar rights and the wind rights, it will go there. It will get there. But right now, it's still in a leasing space where energy companies go out there and lease solar rights. They lease wind rights.
Gotcha.
So when they lease, it means the solar farm hasn't been put in there yet. They're going to lease the rights to put a solar farm. But that still gives opportunities to investors to buy to lease those solar rights, and then to work with an energy company, and maybe they would keep an override on those solar rights that then they would lease them again to the energy company, to the developer, and they would put in place those solar farm. Does that make sense?
No, that makes total sense. I'm guessing that that type of investor that would, a smaller investor that would lease and then ultimately look to, I guess you could say, sublease to a larger corporation, wouldn't necessarily be someone that's just entering into this space. I mean, it'd be a much more sophisticated investor, correct? I mean, or is that a service that your company provides? If I said, hey, Yoann, I have an interest in buying this 95 acre parcel or leasing this 95 acre parcel in Logan County, Colorado, would you help facilitate me finding a larger operator to actually come in and sublease that property or give me overrides or what have you? Is that a service that your company provides? Yeah. Am I saying that right? Am I?
No, you're saying it right. Okay. We're marketplace. So we're in touch with the landowners and the sellers and energy companies that would come and develop that at some point. So we can help facilitate any of that as a marketplace. Okay. And we provide the as land experts and professionals in land resources, we provide the confidence to the sellers and the buyers in the value and the resources. So we produce every listing or every valuation appraisal we do comes with a reserve report that's certified as that is all SEC compliant in terms of reserves categories, and that really helps the transaction happen.
Got it. Okay. Again, there's probably other questions I need to be asking you. I'm not sure what they are. And so maybe why don't you tell me, is there anything just relative to this entire conversation and, understanding that the majority of the investors probably listening to this show aren't, fully versed in, investing in mineral rights and also renewables, what have you. What are some other basic topics or pieces of information that would be helpful to those that are listening to better understand this space?
That's a great question. I would talk about the market, like generally speaking, the market size. If you're thinking residential real estate, I have the numbers before COVID-19, right? Like for residential and commercial. If I'm remembering correctly, I would say residential real estate around 9 trillion a year market. Commercial, you can correct me there. And I'm trying to dig back. I think it's around maybe 13, 16 trillion a year. The market for commercial real estate before COVID-19.
Right, all before COVID.
Right before COVID. So that might change now. I think residential will go up and commercial will go down. But land resources, the land component of the residential real estate, what you see on Zillow doesn't really care about the land real estate because a 6,000 square feet lot in San Francisco is worth more than 2,000 acres in New Mexico, right? But actually, when Zillow understands that the 2,000 acres in New Mexico have a lot of land resources associated with them, then that would become a much more valued commodity, the land and the land resources with it. Right now, landowners, investors do not really know what the land resources are worth, those associated with their land. So very often they kind of forget about it and they just sell for the surface land.
Yeah.
And in terms of market, the land component of the residential real estate without the land resources is less than $500 billion a year. Small. It's small compared to the residential real estate. The land resources, I would say right now it's around 4 or 5 trillion a year. Like when you add minerals, solar, wind, water, and you keep adding like cell towers easements, you keep adding those land resources associated with the land. It's a large market. And if you compare that to the residential real estate market, it's been going up throughout history, plus or minus corrections due to to the economy. Every 10 years, there's a correction there, but it's been going up, and the land resource is the same. Like those land resources, the market will keep increasing because we need more and more land resources. We need more and more rare earth minerals. We need that to put in our sales funds. We need that to put in our batteries of the electric vehicles, right? Right now, China has a monopoly of those rare earth minerals. The US government has been trying to push to incentivize companies to go find rare earth minerals to remove some of that dependency on China. And that's mining. That has a lot of value.
Yeah, no, all great information. So what advice would you give, someone that's just going to jump on your website for the first time? There's a lot going on there, right? I mean, it's, again, from an investor's perspective, looking to gain some additional knowledge on what investment opportunities are available. Is there any guidance you would give that first-time visitor to the website to make sure that they're spending their time in the right place?
Give us a call. We'll be happy to help. And whether you're an investor, you're a buyer, you want to sell, you have land resources yourself that you don't know what the value is, you're interested in some of the listings, whether it's minerals or solar rights or wind rights, just give us a call. We put a lot of information out there. We are a young company. We started in 2016 with some pretty damn good engineers, but we're not so good at marketing. I have to say, what I say by marketing is not, we're really good at marketing the properties. We're learning how to put like the data in a better format so that people understand it better and boiling it down. So give us a call. We'll be if you cannot find your parcel, if you cannot find the data intelligence for solar, wind, or minerals, or you don't understand it because it's very complex, just give us a call. We'll help you.
Okay, fantastic. So you've actually got customer service reps that are available that can help someone walk through some basic questions and guidance once they get to your site.
Yep.
Okay, fantastic. Well, Yoann, this has been a lot of fun, man. Lots of great information. Again, you've enlightened me in many different ways. I'm looking forward to actually having a conversation, maybe offline with you as well, to see what kind of opportunities exist and going down that road. But before we say goodbye to one another, I'd like to enter into what I call the Golden Nugget segment. And this is where I'd like to ask of you if you could leave one final Golden Nugget advice or wisdom that might inspire, motivate our listeners as they progress in their own investing careers. What would that one last golden nugget be?
Diversify your portfolio.
Yeah.
I would say diversify your portfolio. And a lot of, like you talking with a lot of real estate investors, and they invest in property here and there. I would say just add to this diversification and get some actual resources in there in your portfolio. Yeah, that'd be my 2 cents. Diversification is yeah.
That's great. I love it. Yoann, this has been a lot of fun, my friend. I appreciate you coming on here. Guys, to learn more about Yoann and their group, you can go to their website, landgate.com. Again, that's landgate.com. We'll be sure to put that in the show notes as well. And so, Yoann, that's all we have, my friend. I appreciate you joining me here today.
Thanks for having us, Kevin.
Alrighty, guys, that's all we have for this week's show. So until we meet again here next week, this is your host, Kevin Butt, wishing you huge success. You take care.
Congratulations. Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.